Good afternoon, everybody. Welcome to this panel, very interesting panel discussion as part of the West Africa CxO Forum. Today we'll be discussing maximizing growth while minimizing risk, facilitating trade and investment while mitigating risk, while scaling up businesses in West Africa. We have a very interesting panel here today, and I'm hoping we'll have a very interesting discussion that will throw light on. Please kindly mute. I'm hoping we'll have a very interesting discussion here that will throw more light on this very interesting topic. I have a very powerful panel, including Dr. Akintoye Akindele, Chairman and CEO, Atlantic International Refinery and Petrochemicals. We have the legendary Austin Okere, founder of the Computer Warehouse Group PLC. He's also on the panel. We have Olufumi Adepoju, Managing Partner, Pearl Mutual Consulting Limited. We have Ayodiji Adelokun, Executive Director and Group Chief Financial Officer of GZ Industry. We have Jeffrey Clark, Managing Partner, Appleby, BVI Limited, who are partners to this very panel discussion. And then we have Adenike Sinkard, Managing Partner, Sinclair's BVI. Before I go on, I would like to get the panel members to introduce themselves. We have like 30 seconds for each of them to just tell you a little bit about themselves. I'll start with Dr. Akintoye. Dr. Akintoye, please, you have the floor to just introduce yourself.
Good afternoon, everybody. And the host has been pretty kind to give us 30 seconds to introduce ourselves. I think that's barely enough for my name. So my name is Akintoye Akindele, and I work for Atlantic International Petrochemical Refinery today. Thank you for having me.
Okay. Dr. Austin Okere, please, can you introduce yourself? Okay. Is Austin on?
Yeah, I was just trying to unmute myself.
Okay,
so,
okay.
To start with, it won't be doctor, it will just be Mr.
Mr. Okay.
Mr. Austin Okere. And so I am the founder of CWG PLC, is the largest security on the technology sector of Nigeria Stock Exchange. I also am on the Global Business School Network, as well as the World Economic Forum Council on Innovation and Entrepreneurship, and on the Business Practices Council of the AACSB. And I run also Leadership Academy, which is a think tank for thought leadership.
Yeah, thank you very much. Adenike, please, if you don't mind, just tell us a little bit about yourself. You're muted.
Sorry, okay, thank you. Just popped up. Hi, Anthony. Thank you for having me on this panel. Good evening, everyone. My name is Adenike Sinkard. I am a lawyer. I've been practicing law in the British Virgin Islands for over 20 years. I'm the managing partner of a law firm called Sinclair's BVI. We have an office here in the BVI and in the Cayman Islands. I practice or specialize rather in corporate and commercial law, trusts, investment funds, and regulatory law.
Thank you very much.
I'm so happy to be here to speak on issues that Anthony will be asking us.
Thank you very much. Yeah, you're welcome. Olufumi, please. A little bit.
Thank you so much.
Yeah.
Thank you, Anthony, and hello, everyone. It's a pleasure to be on this panel. My name is Olufumi Adepoju. I'm the managing partner of Pearl Mutual Consulting. It's an advisory business that focuses on fundraising, financial advisory, and executive training. We try to improve access to finance for SMEs through business incubation services and then provision of bridge finance. I believe that that's all 30 seconds would allow me to
yeah,
do.
Thank you. Yeah, Jeffrey Kirk, please, a little bit about yourself before we go on.
Thank you, Anthony. Welcome, everybody. It's an honor to be on this forum with such distinguished colleagues. I'm the managing partner of Appleby BVI. Appleby is a global offshore international financial center law firm. We have offices ranging from Hong Kong, Mauritius, Seychelles, through Guernsey, Jersey, through to BVI, Cayman, Bermuda, and we are involved in investor relations, structuring deals and transactions, and basically facilitating growth and infrastructure projects worldwide. Thank you.
Yeah, thank you very much. And then Ayodeji Adelekun, please.
Okay. Good afternoon or good morning, everyone, depending on what part of the world you are. My name is Ayodeji Adelekun. I'm an accountant by profession, and I'm a fellow of the Society Accountant of Nigeria, and also a fellow of the International Taxation of Nigeria. Currently, I'm the group chief financial officer for GZ Industries Limited. GZ Industries Limited is a sub-Saharan can manufacturing entity. I sit on the board of the Nigerian entities as an executive director, and also sit on the board of the South African, Kenya, and Mauritian entity as a non-executive director. It's a pleasure to be here, and I look forward to playing this session with you all. Thank you.
Yeah, thank you very much, my wonderful panelists. And I'm really happy to moderate this event. I expect a very interesting discussion that people will leave here gaining some insights on scaling up businesses in West Africa. I'll start from Adenike this afternoon. I think it's afternoon. I'm hoping we're in the right, we are all in the same time zone. Adenike, if you don't mind, let's start this with you. Let's start with businesses and access to incubator funds, crypto intelligence and asset management services. How can businesses access this crypto funds in crypto intelligence and asset management to enable them scale up quickly? We know how the world is changing with these new innovations. So in your opinion, how do businesses access these new intros into the financial world?
Thanks, Anthony. Your question refers to the incubator funds, crypto intelligence and asset management. So I'll start off firstly with the incubator funds and how businesses can access those. With respect to the incubator funds, they're very easy to access. And the BVI is one of the best offshore jurisdictions in which to launch an incubator fund because of the speed, economy, and ease with which one can be set up in the BVI. And the BVI funds have captured a significant portion of the hedge fund or crypto markets globally. Whether you're an asset manager or an investor located in Africa or in any other part of the world, you can utilize BVI fund products. We have several different fund products here in the BVI, which you could inquire about to determine which one suits your needs and goals. However, as your question refers to incubator funds and scaling quickly, I'll focus on that type of fund. So some may ask, what is an incubator fund? And to get straight to it, it's a fund that has light touch regulation here in the BVI, and it's very easy to set up. They're mainly used by investment managers who are looking for a low cost option to set up and also want to use to develop or incubate a track record in trading investments without having to comply with onerous regulations. Some may look to family or a group of friends to provide the seed money, or they may provide it themselves, especially if they're keen to build a track record and start up. So after they've developed their track record using the incubator fund, they may then develop progress or transition into a bigger fund, get regulated, and attract even higher net worth investors. So a business may either be an investor in an incubator fund, or they may set one up themselves, depending on what they want to achieve. And the first step in setting one up would be to contact a lawyer in the BVI. The BVI incubator fund, they're interested in setting one up, they would need to know the requirements, and we would tell them the requirements initially, which is that each investor in the incubator fund, their initial investment should not be lower than $20,000 US. It's limited to a maximum of 20 investors at any one time, and the investments must not exceed $20 million in net assets. It's limited also to operate in for 2 years. And they may operate for that time without a fund administrator, custodian, manager, or auditor. However, after the 2 years, it must scale up to another type of regulated entity, such as a private or professional fund or wind up. So if you look at these requirements, especially in the fund industry, they are suitable for an investor or an asset manager who is looking to start up in the investment fund business and to do so quickly. In the BVI or Incubator Funds regime began in 2015, and a number of incubator funds have been set up since then. It's been steadily increasing. There were 51 incubator funds in the third quarter of 2018, and at the end of last year, they were up to 102, and in the first 6 months of this year, 19 were already set up. So it is definitely a tool to use in order to quickly scale up and to begin earning some profits in the market that you choose. Your question also mentioned crypto intelligence.
Yeah. Yeah. Hello?
Oh, I think I lost her.
Okay.
High frequency.
Okay, yeah. Okay, so it's back. Yeah.
Sorry?
Sorry, we lost you briefly, but you're back. Continue, please.
Oh, sorry. What was the last thing you heard?
No, you were talking about asset management and hello, are you there?
Yes, I can hear you.
Okay,
well,
yeah.
I gave some statistics. Did you hear that?
Yeah, we got the statistics part. The 19 funds
Crypto
set up. Yeah. No,
okay.
The 19 funds set up at the beginning of this year.
Well, in the first 6 months.
Yeah,
so the end of
stage,
June, we had 19.
Yeah.
So your question had mentioned crypto intelligence.
Yeah.
So I can't speak for the crypto intelligence platforms or the trading systems. However, I do know that the majority of the investment banks and hedge funds already execute high frequency trading through automated trading platforms. So they are using artificial intelligence. They're using financial algorithms which can perform quick detection and analysis of patterns and trends, automate trading processes, and these would help the asset managers and investors to make the most informed and timely crypto trading decisions. And anyone who knows a little bit about that or in trading in general would know that timing is very crucial. So while growing in use, however, I don't think that this artificial intelligence or use of crypto intelligence may replace people. However, it definitely is a tool that facilitates trading quickly, especially in cryptocurrency investing. So that is definitely an area that you can see is growing. There is globally increasing curiosity, use, and launches into using an incubator fund to invest in various types of assets, including cryptocurrencies. There is opportunity for such fund managers to start to build up their portfolio and then transition into a longer duration and regulated fund where they hold crypto assets. My guess is that the fund manager may wish to hold such assets on a long-term basis. However, I'm not an investment manager, nor am I an investment advisor. I'm a lawyer. I can only advise you on the legal setup of the investment funds and their advantages and which would be the best one to use for your purposes and goals, especially as a business wanting to grow and scale up. The other part of your question
was on asset management. Briefly on asset management.
Right. So I did touch a bit on that.
Okay.
Right, with respect to what they may use.
Okay.
You also asked what advice.
Yeah, would you give businesses steps to do this?
Right. What advice would I give businesses to encourage them to take the necessary steps to do this, to scale up quickly? And my advice would be for them to look at certain key factors when they're choosing a jurisdiction to set up their fund, such as what fund products or what fund products are available in that jurisdiction, which would suit your needs. So for example, the BVI has 6 different types of fund products. We have a professional fund, which is for the more experienced and institutional fund managers, more experienced and sophisticated investors. We also have private funds, mainly used by people who are connected in some ways, a group of friends or family, who may have mutual interest in pooling their funds for collective investment. Public funds, it's definitely a more retail product, higher degree of regulation, but no restriction on numbers or categories of investors. The Incubator Fund, which I touched on, is increasingly popular starter funds for newer investors and managers on the block. The Approved Fund we also offer, it's also very popular, and also for the light touch regulation if you're looking for that. And the Private Investment Fund, closed funds, set lifespan, people who are interested in setting up a fund would look at those. The second factor I'd advise someone to look at would be, does the jurisdiction have an established funds regime? So in addition to looking at the products that they're offering, yes, they offer this, but what can that jurisdiction do for you in terms of its reputation and the regime that's there? And the BVI has a long established reputation for providing cost-effective corporate structures for raising finance and for collective investments. In addition, the BVI has a financial services commission that is experienced in the fund business and which is responsive to the needs of fund managers and investors in investment funds. The other thing that I would suggest looking at is the track record and marketability of the product. So if you're an asset manager and you want to set up and establish a fund, you want to also make sure that it can be easily marketed. And the BVI has a track record of being a jurisdiction of choice for most fund managers. And the BVI funds are well known in the fund industry, and they're more attractive and easily marketed. Okay. BVI corporate structures are well understood globally and are listed on stock exchanges worldwide. And to balance that off on the legal side, investors continue to be attracted to the BVI for its common law legal principles, including protection for lenders. There's an independent court system and a separate commercial court dedicated to dealing with commercial and corporate issues only.
Okay, I think maybe I'll have to come back to this later because I want to go straight to the next question because of our time constraints. Yeah.
Well, I just wanted to add one last thing I haven't finished, which is that to say that there was an independent report issued in 2019 by the Overseas Development Institute, and it found that international finance centers, which includes the BVI, boosted developing countries' GDP by 400 billion and tax revenues by 100 billion between 2007 and 2014. And a lot of this is facilitated by the use of entities such as BVI companies or partnership and other corporate commercial structures.
Okay. Yeah, thank you very much for that extensive explanation. We'll come back to you, hopefully before we round up. I'm sure there will be a lot of questions also to come back to you on this over like the cost of funds in these jurisdictions compared to other jurisdictions and every other thing. But let me go straight to Olufumi, the ladies first. Olufumi, one of the biggest things that has happened in the African continents in the last 2 years or so is the launch of the African Free Trade Zone. And its expected impact on the growth generally on the continent. How, taking into account, what's it called? How big the AFCTA is supposed to be? I want you to look at it and tell me what's it called? Working in reality to facilitate across taking into account what steps can governments and businesses take to accelerate the growth of the AFCTA on the continent, if you don't mind?
All right, thank you very much. And hello, everybody, once again. like you have rightly said, this is something that the whole world believes that it's going to do so many wonderful things for Africa. But we must bear in mind that Africa is made up of so many countries, and we are not all at the same level. Therefore, the benefits to each country, even under this program, definitely very different, and the World Bank has given quite a number of indications as to which countries are likely to benefit more and those that are likely to benefit a little bit less. Having said that, I believe that there is a possibility of very ample gain for each of the countries that are going to be participating. So the first thing I would like to talk about is what should governments do? Each government needs to, I think the summary of everything, because of our time, I would like to give a summary and just give a few points there. Each needs, or the government of each country needs to look out for their local business, because you don't want to open your markets up for everybody, and then in the bid of doing that, then begin to lose even your own local markets. So it is important for, as they negotiate, because negotiations are still going on, as they go to the negotiation table, it is important for the government look out for their local businesses. And how do they do that? I hope you can hear me.
Yeah, okay, yeah.
Number one, all right, thank you very much. Number one is they need to first of all make sure that they provide adequate infrastructure. I see a situation where these negotiations will still go on for like 1 to 2 years, 18 months, 24 months. And so in that process, there is time for governments to start improving on the necessary infrastructure, reduce their infrastructure deficits. It's possible for the businesses in their jurisdiction to be more competitive. And in doing so as well, improving the ease of doing businesses in their own local, so that they become, all of this is just to improve the competitive advantage of the companies in their jurisdiction. Reduce multiple or duplicate taxes on the local business. All of this is going to affect the cost of production of these companies in their jurisdiction, affect their ability to be competitive on the continent level. Governments also need to help with facilitating access to finance, so that because as companies begin to scale up, the kind of capital that is required is usually more long capital, and therefore it will be better if they can get better access to this kind of long-term finance, either from donor organizations, from big development banks and things like that, and of course private equity and some of the other Adenike has already told us about. The last point I have here is aggressive education, because a lot of things over the heads of people, and they really do not know the details of the opportunities that are available to them under this program. So it will be the duty to engage in aggressive education, and to enable the companies in their jurisdiction to understand the benefits of what is coming up and how they can position themselves to take advantage of that. And when the government is doing their own parts, the businesses also need to do their parts as well. And the first thing I wrote here is, that I noted down, is knowledge is key. So there is, before you go into other people's jurisdiction to begin to do business, you must understand those markets very, very well. So it is for them to do a lot of market research, understand the way the dynamics of their industry in various markets within the continent, so that when they get to the point of competing with these businesses, it becomes easier. Local knowledge, you can never underrate local knowledge. So the knowledge that those in a particular market have would always give them some level of competitive advantage as well. So businesses begin to think of scaling up and getting out of their comfort zone, they must know what they are getting themselves into before they go ahead to do that. And they must understand what makes them to stand out when compared to other organizations. As they begin to move into other the laws, the quality assurance, the standards differ from one of those jurisdictions to another. So that's part of the knowledge and the things that they need to know so that be well equipped to do what they want to. Engage consultants where possible, because when you want to do all the work yourself, you may not necessarily be, you may not have the time and the energy that is required to put into that. And that the last point that I would like to add for the businesses is when you are thinking of taking advantage of going to the whole continent, I think it is a good idea to think of both serving the whole continent together with even exports out Africa. If you take these together, then you probably will be going the best way, you'll be doing the best thing so that at the end of the day, you can get the best result from what you've done.
Yeah,
thank you.
Yeah, thank you very much, Fumi, for that insightful. I would love, we'll come back to some of this later if we have time in terms of governance, setting up a good governance structure, if you're thinking of expanding outside your zone. But I would like to go to Mr. Austin Okere right now. Adenike spoke glowingly about moving out, getting incubator funds and the ease with which you can get it. You can access it through BVI and the need for it also. Fumi has spoken about the need, what it takes to expand beyond your zone. I would like to come to you based on your experience. You've been around in the business world for such a long time. So I'd like to ask, in assessing incubator funds, crypto intelligence and asset management, what should businesses watch out for based on your experience and the way you've grown businesses over the years? Yeah.
Yeah, thank you, Anthony. I think the first thing is what you talk about SMEs, which starts at a startup and then become an SME. A lot of people approach me and they say, Austin, I have this beautiful solution, and they're starting from the solution. I think business is that you've seen a problem and you can provide a solution to that problem in a form that lends itself to a commercial success. So it's not about going to make a solution such as a self-emptying ashtray when we're going away from smoking and then start looking for customers. It's about looking for a problem. For instance, women carry two shoes, one to wear to drive, one to look tall in the office. And if you want to solve that problem, you can make a shoe with retractable heel. Then you have a real problem you are solving. Then you can then start building a business around it, making it commercial. So let's say you've got the idea. The next thing to do is to make a minimum viable product. So don't rush to make 50,000 of those shoes. Probably make for friends and family and your wife as well. See whether they will use it. And then when that minimum value is proven, you can get friends and family to augment your savings, and then you start that business based on a business model canvas, which looks at your value proposition, your customer segment. Not everybody will be your customer anyway. People selling pepper and tomato in the market are rich, but they are not your customers. It looks at how you get and keep and grow customers and your delivery channel, because logistics and supply chain can be a problem. Olufumi talked about partnerships. So you look at your partnerships that you need. Your regulator is your partner, and your suppliers are your partners as well. You look at your key activities and then the key resources that you need. So you've done all that. Then you now approach Adenike for incubator funds, because now the business has reached a point where you need to scale it. And then Adenike gives you money from incubator funds, but now the business needs to scale across Africa, as Olufumi have said. And then you then approach the market or VC or PE to raise funds. And when you raise funds, remember that the denomination is usually USD. So if you're in Nigeria and you are raising funds, important to ensure that there is currency matching. If there is no currency matching, then maybe you have forward swaps. If you don't do that, exchange depreciation will wipe out your ability to meet obligation to investors. And we've seen a lot of court cases between investors and people that have taken money because of this. But this is where it gets tricky. The issue about fundraising is that it's not an end in itself. It should be a means to an end. The VC and the private equity, people like Adenike, these are not Father Christmas that are just doing about money. They are astute businessmen. They are not happy with the normal rate of returns for their funds. That's why they go into risky ventures. And they're basically typically looking for 3 times what they put in 5 years. That's the golden rule. So if they give you $1 million today, in 5 years' time, they want $3 million, no story, no COVID. So it's important to study that term sheet carefully that Adenike will give you and look at things that may potentially become pitfalls. It's only when we understand ourselves that there will be a future of tranquility. And one of the sticky things that I realized, you asked me about my experience, is the issue of the golden share. So here, it doesn't matter how much the private equity owns, they have to agree with board decisions before they are carried. If you are not comfortable with it, discuss it at the beginning. The most important thing is the inflection point of business. And this is where you have assimilated all the costs of building that startup with a proven sustainable customer and revenue, especially in the subscription business. Any additional customer that you get is pure contribution margin. That's why you see a lot of VC money and PE money coming into fintechs, because once you have the base platform, everything is contribution margin. It's after you reach this point that you can bring in investor firms, and then they'll share your profit because you're growing exponentially because you've scaled quickly and gotten the first mover advantage. So Anthony, I see a lot of businesses, especially technology business in Africa, rush to social media, celebrate funds they've raised, and be it seed capital, be it Series A, everybody applauds them and then they go to bed, forgetting that success in fundraise is not necessarily correlated to success in business. They are 2 different things, and I think that is where we have to look at it. Let me give you, I don't know if I have time to give my own.
Maybe 1 more minute.
Okay. So if I took $1 million in 2014, exchange rate then was 200 to a Naira. So I have taken 200 Naira, 200 million Naira. Supposing I went to a bank and at interest rate of 20%, in 6 years, the interest will be 240 plus the capital. I'll pay back the bank 440 million Naira, finished. Now, let's do the arithmetic with VC. I took $1 million. 5 years down the line, they want 3x, which is $3 million. Let's even say 6 years. In 2020, $3 million at 440 per dollar, which was the exchange rate then, means I'll be returning 1.2 billion Naira, whereas it was 440 then. In 2021, just 1 year after, the exchange rate is now 580. I'll be returning 1.74 billion, or about 4 times if I borrowed in Naira. So you have to be careful. But CWG took money. CWG took $10 million from Orios Capital LLC. The reason we took that money was because we had reached that inflection point where in Ghana, Nigeria, Uganda, Cameroon, and we use that money to quickly scale. And that's why CWG today is the largest security in the tech sector of the Nigerian Stock Exchange. Thank you.
Thank you very much. That's quite insightful. And if not for time, we could have asked more questions around that, especially the issue you raised about taking dollar-denominated funds and just running to the market happy about it, not unmindful of the risk that comes along with it. But then we'll hopefully we'll be able to, or people will ask questions about that later. The audience will ask questions and we'll come back to it. I would like to go to Dr. Akintoye, who is also a top player in the business world. We want to get his perspectives on 1 or 2 issues. One, we would like to go straight into, we've been talking about business. Akintoye is a multinational business player in the business field. And my question, Dr. Akintoye, if you're on, will first of all be, what would you say are the unique investment opportunities? We're talking of Africa and its huge potential. What would you say are the unique business opportunities on this continent? And what are the pros and cons? I want you to take it together. of scaling up businesses, specifically in West Africa, this year and beyond? Yeah.
Thank you very much. And I think I've just been following everybody's conversations, and what they've said just to confirm my views. When you ask me for the unique investment opportunities, I'll tell you one simple answer. Africa is an opportunity itself. We need everything in Africa. We need shoes, we need clothes, we need phones, we need everything. So from a point of view of an opportunity, you have 1.4 billion people playing catch-up, 1.4 billion people that need accommodation, they need food, they need shelter, they need phones, they need data, they need everything. So from a market universe point of view, a macro point of view, the thesis is strong. And now you then have that market size that is even being opened up more by the African Free Continental Trade Act on one side, that is now being driven by young population, average age of 19, that is scaling up, acquiring skills globally, that is scaling up, connecting with global partners, that is truly collaborating and partnering. What do you have? You have market meeting vision, hunger, and execution. The challenges are there, but almost every sector poses an opportunity, from fintech to agriculture, to traditional banking, to energy, to midstream, to manufacturing. The opportunities, market size, market demand, scale is there. Now, historically, we've always had this. What has changed by the last few years, I will tell you. One, there's a lot more information and data available. One, a lot more available. What does that mean? It means that in the past, data was not available. There was information asymmetry. Now there's data available. There's exposure. The more exposure we have drives more interest. Interest drives investment. Endeavor drives more exposure. So continent as an opportunity is now not just topical, it is real. So is there? Three, we then have teams who are now partnering with global partners, who are learning, who are becoming more skilled, who are then also developing skills that can enable them scale across markets. It's not just enough that you do one market. You have to have business models that are scalable, that have depth, that have width. Now, the implication for all this is obvious. Up to 2019, the first African unicorn was in 2019. Between 2019 and now, we have 9 unicorns. It was 8 up until yesterday, and then became the 9th unicorn. It's my point. In 2 years, we've created 9 unicorns. We have a conveyor belt of another 12 unicorns that we think, from our research, by the next 2 years, will be created. Now, take this within the context of, even though we are creating unicorns, there are still over 830 unicorns, of which 330 this year were created. Now, unicorns are not just about tech alone. They're innovating sectors in energy, in finance, in industry, in fashion, in media. So technology is no more an advantage. It's not a foundation for which every industry is being based on. When you ask me what about Africa is attractive, I'll say to you, everything is. Just fuse tech with the market gap, with the business model, with the opportunity, and execute. Execute from a fundraising point of view. Execute from a business model point of view. Execute from a theme point of view. Partnership, collaboration. It is extremely important that we bear that in mind. So Africa is not topical. And what makes Africa also attractive is the more you invest in Africa, you're not just making an attractive return or yield, as we have seen in all the deals that we've done. You're also doing impact. Because by investing in a continent, you are changing lives, you are creating jobs, you are creating ecosystems that don't exist. So, especially for socially conscious investors globally, African opportunity represents attractive yield, above normal yield, plus impact on the side. And you can see it, it's obvious. You can see people have more mobile phones, can see people deploy more payments, can see people wear better shoes. That is what Africa represents. And to scale as well, it then means that business models that are being developed are scalable. No more at the end days where you just want to solve the market in Enugu and you stay there. It has to be what is able can work in Nairobi, can work in Kinshasa, can work in Soweto, can work in Dakar, can work in Marrakesh. It's now one potential market. Why have we mentioned that African government should protect the local industries? That is nice and support them, but it's going to be for the best innovators to win globally. So there'll be a rise of global companies from African origin. I call that global. There'll be exposure. There'll be more opportunities for the best to get better. And for me, that is the story about Africa. It's the opportunity, it's the scale, it's the hunger, it's the ambition, it's the energy. Despite all the challenges we have, and we have them a lot, but those challenges, those gaps are opportunities. You can see a country with no shoes as a problem or opportunity. Africa is the future. Africa represents an attractive youth, and whether you want to innovate it from a digital point of view, or from a physical point of view, or from even from partnering point of view, if you're not doing Africa, you're not the table. We are the new table. We are the new opportunity, and that's what it is. And our markets are getting more homogenized and more uniform. So from ECOWAS to Africa, I mean, you can't drive from Lagos all the way to Dakar. The roads are open. You have people who have education. You have people who are skilled. You have homogeneity. I'm just a big fan of the continent, not because I'm African, but because I've invested for the last 35 years of my life in Africa. But the last 5 years, I've seen major growth. Our portfolio at platform is over 127 companies globally, and our best performing assets are on the continent. So why won't Africa be the future? The future is black.
Yeah. Huh? Thank you very much, Dr. Akintoye. That's very inspirational. I'm hoping you stay on to the end of this program. I'm sure there will be a lot more questions. I know they say you want to leave a bit early, but if you can really stay till the end, we'll be happy, because I'm sure there will be a lot of questions. You've given an inspirational talk on Africa, and it's coming from someone who is really investing on the continent. So it's not hearsays, from direct experience you're talking about. But people will want to know, how do you overcome the darkness, what's it called? The heavy feeling of negativeness about the continent, that knowing where you're based in Nigeria, you know how that negative feeling is spurring a lot of emigration out of the continent, out of one of the biggest markets on the continent right now. So people want to hear your perspectives on this. But I'm hoping you stay, because I need to get to one or two more panelists and then come back to you on this. And I'm sure there will be more questions on that, on this. Ayodeji, I want to come down to you, back to you, come to you on this. We've talked about the businesses, we've talked about the structures. We need to go to the money. You're an accountant, you are the CFO. And at the end of the day, whatever we are talking about, whatever inspiration that is driving investments, people want to know about the money side. The money side is where the risk always comes. So how can businesses mitigate risk to support their goals through innovative services such as corporate structural solutions? How do you achieve this? What would be your advice?
Okay. Good afternoon again, everyone. Thank you, Anthony.
Yeah.
I think, like you rightly said, the business environment is becoming more complex and volatile day by day. If you compare the circumstance of the corporate environment today to previous years ago, we'll see that there's a lot of complexity and volatility, which boils down to the fact that the operation of the environment is becoming riskier by the day. And risk itself is an event that may impact an organization from achieving its goals or objective. And at the same time, risk is also could be rewarding, because the more, like we usually say in finance, that the higher the risk of a particular project or investment, the higher the return. And like Dr. Akintoye rightly said, what actually one of the reasons why returns in Africa, in emerging market is higher, is because of the volatility of the environment, so it commands a higher risk premium operating in that environment. So that being said, in addressing or in mitigating such risk, what sets businesses apart, right, is their approach to risk management. how do you approach your risk management as a business? You could have business A and B in the same environment, right? With the same structure, with the same opportunities, and you have one business, business A excelling above business B because of business A's attitude and approach to its risk management. So how do we approach risk? How do we mitigate risk? It must be methodological, right? So it must be in a way that it must be imbibed in the structure of the organization. And what I usually advocate is for businesses to have an enterprise risk management framework in place, right? And what we mean by an enterprise risk management framework is a methodological approach, in identifying your risk as a business, in assessing your risk as a business, monitoring that risk and controlling that risk so that you can identify and rank your risk appropriately to be able to know the right approach to mitigate and those risks. And this must be enterprise-wide. It must be from top to the bottom, because risk management of organizations is actually responsibility of those charged with governance, which is the board. And to do that, it means that there must be that orientation from the top to the bottom, and it must be something that is encompassing within the organization. And in defining or in designing an ARM framework, we talk about a risk policy. You must have a defined risk policy in place as an organization. You must also define your risk appetite. And what we decide or we determine that depends on your environment, the industry you play, your structure, and then even your size, right? Because that will determine how you want to define your risk appetite. If you're operating in a country like in Nigeria, for example, your risk appetite must take into consideration the volatility of that environment, affects macroeconomic indicators and what have you, compared to when you're operating in maybe in a South African market. That will also, you take into consideration your immediate environment. And then the industry, risk appetite also varies from industry to industry. In an oil and gas industry, for example, there are certain factors that you need to take into consideration in defining your risk appetite, as opposed to maybe a service industry. So what actually matters, or what affects the volatility in various industries also matters. But what is very, very important is the risk governance, because that is what set the tone. That is what defines how risk should be mitigated or managed. And this talks about the structure of risk management. And risk is a very serious business, and I always advocate that, especially for large corporation or medium-sized corporation, to have a dedicated function for managing your risk, right? I've seen instances where people combine risk management, internal control, and their internal audit or assurance into one function. It could work especially if you're a small organization, because there's also a cost attached to it. So you need to look at the cost benefit. But it's always advisable to actually have a dedicated risk management function, right, with a defined ERM framework, so that maybe your compliance and assurance can also always try to oversee and evaluate that function. I've seen instances where risk management is also outsourced. I know some consultants would not agree with me on that, but I always believe that because risk management has to be embedded in the culture of the organization, it's always better to have it in-house. Because when you outsource it, there's a tendency for the outsourcing function to understand some critical areas of your business. So, but when it's embedded, it becomes part of the business. It's even better for you to outsource your assurance function, internal audit function, or even accounting function, than outsourcing risk management function in my view. Because, like I said earlier, operating in a very volatile and complex environment nowadays requires serious approach to risk management. And then, okay.
Yeah, 1 more minute so we can round down. Yeah.
Okay, so okay, thank you so much, Anthony. I think
well, I would say we would love to come back to you too. It's just that time is running, especially when you talk about this. It seems more structured for bigger organizations than for startups. So how do startups, for instance, look at mitigate their risk right from day one, and know what they face as they grow up, scale up their businesses. But we'll likely come to that. I would like to go to Jeffrey, who has been patiently waiting for us to talk about for Jeffrey. We're going back to BVI and what they do for businesses growing up. And basically it also comes back to what you were talking about on how do you manage your risk growing up. Jeffrey, I want to ask, how can an international financial center like the BVI assist to maximize the benefits of the African continental free trade area? And how can BVI strategies accommodate scaling up through, through BVI Business Companies Act and the newly improved BVI Limited Partnership Act? I hope you'll be able to educate us on that.
Yes, thank you, Anthony, and welcome again to everybody. I think it's a large part of this relates to the African Continental Free Trade Area and the fact that that's gone live at the beginning of this year. As you'll all be aware, West Africa in particular is an area that has fully subscribed to the free trade area. It's the world's largest free trade area and really presents a number of opportunities for Africa and West Africa in particular going forward. And I'm just going to touch on a couple of points that some of our other speakers have made earlier. I mean, Olufumi had mentioned about the importance of access to finance for Africa and African businesses. And that's really a key aspect. And that's one of the aspects where international financial centers like BVI come into the equation and really can offer a lot of value and added value to the situation. Adeniki had mentioned early on about the ODI report of 2019, and that report looked into international financial centers and development finance globally. And what it found was that developing nations were being held back by a lack of financing, which is exactly what Olufumi was talking about. IFCs, well, it also found that IFCs have a crucial role to play in creating that financing. They can provide secure jurisdictions. They, as Adeniki mentioned, fund structuring, tax neutrality, although that's just one of the part benefits. A zero corporate tax rate is a benefit, but it's not the sole driver of structuring through IFCs such as BVI. And it also creates a unique venue for investors, both private investors and public-private co-partnerships. A place like BVI has been a jurisdiction of choice, particularly for our Asian clients, Chinese clients, Japanese, South Korean, and Southeast Asia, but we have clients based all over the world, Africa, Europe, North and South America. And there's a reason why they use IFCs. And the reason why they use IFCs is really we have a liberal business structure. We have business-friendly implementation and processes. Particularly, we have lender-friendly laws and jurisdiction. And what that does, for instance, if there's going to be financing into, let's say, for instance, a public-private partnership deal in West Africa, and if there's going to be a development bank involved in that, they would prefer to have the financing level at an IFC level. So, for instance, BVI. And the reason for that being is that the laws and jurisprudence have historically been favorable to lenders. There's a situation and a regime of security registration, collateral registration regime, which is very effective. So that gives lenders the comfort and satisfaction of knowing that should there ever be a default and enforcement, that they in fact are protected. And the ODI report found that, you know, development finance institutions, I've mentioned the development banks with extensive experience in these kind of investment opportunities, support and have historically supported the use of IFCs. And they found that IFCs such as BVI really create a unique forum to facilitate that foreign investment into Africa, and that's the driver. Historically, IFCs have contributed some $1.6 trillion in investment between 2007 and 2014, and as Adeniki said, boosted GDP by $400 billion and tax revenues by over $100 billion during that period. And most importantly, these projects are geared towards infrastructure. So it's not just profit taking, it's adding real value to the jurisdictions in which they're coming in. The BVI has unique structures. It has a unique legal system, as do a number of IFCs that facilitate this process. Austin spoke about the golden rule, for instance, for private equity vehicles. BVI has a limited partnership vehicle, which is geared to closed-ended private equity funds. So what's going to happen, a private equity fund is far more likely to structure their investment and their pooled investment from different international investors into a vehicle at BVI level, which will in turn structure it through possibly another IFC, possibly Mauritius, and then Mauritius in turn will invest and have a subsidiary that is based in whichever African state that the project may be driving in. So that's ordinarily the structure that we'll see in these types of projects. There's been a lot of talk about cryptocurrency, fintech. BVI has been one of the real drivers of that in jurisdictions in terms of, we have a number of crypto exchanges, more than numerous cryptocurrencies that have been launched out of the BVI. And this creates, we have crypto technicians on the ground in BVI. So this is a new area where the BVI has been at the forefront and is really driving that aspect. So to the extent that cryptocurrency might be looking at investment into Africa, it is likely that those foreign investors would look to an IFC, possibly a BVI vehicle, to structure that investment into the relevant project in Africa, wherever it might be. And that's that I think will be a real driver and a real benefit to the Africa free trade area, because it's going to provide investors with a secure means of investment and ultimately getting a return on that investment, but at the same time adding value to the African states themselves. Thank you.
Yeah, thank you very much, Jeffrey. When you were speaking, I was just wondering if there will be a day where we'll have a crypto-based fundraising for startups someday.
I'm sure it's on its way.
Yeah, that's interesting. But I'm sure we can come back to that later with this thing. But we have some questions in the Q&A that I would like for us to go straight into. Our 60 minutes is almost up. But let me say, let's just go straight to the Q&A, and then maybe we'll come back and round up with 1 minute each from each of the panelists. There's a question from Ahmed Ali. It says, please, I would like to ask Mrs. Adepoju, how do we break the genes of African countries to collaborate for a successful AFCTA? Adepoju, you want to answer that?
All right, thank you very much, Anthony. I'm not very sure what Mr. Ali means by the jinx for African countries, but I think what he's trying to say or to emphasize is the difficulty we often have in being able to collaborate with one another. And to me, it's quite simple. Number one, you need to understand your current position as a business, what your strengths are and your weaknesses. And what am I trying to get at? What you said earlier, Anthony, and that is the issue of the importance of structure. I think a lot of times, especially for those businesses that are not yet very big, those that fall within space in Africa, you tend to find out that we cut a lot of corners, a lot of things. So it's very important for businesses as we go into this transactions to make sure that right, get your structure in order in terms of, Ayodeji spoke extensively to risk management. And when he was talking, I said, I thought to myself that with risk management must come good governance structures, compliance. So all those things work together. So you have GRC, you have to make sure that everything in order. Now, once you're sure that, yes, you've worked on your own structures and your partner or would-be partners too have worked on their own structures, then the question then is, what kind of agreements are you signing? Are you just doing the kind of agreements where the two of you just sit down and you say, this is what we want to do, or we look like trustworthy people, and because of that, there should be no problem? I think that would be the wrong way to go. You need to make sure that you dot your I's and you cross your T's. Make sure that you have legal, looking at what you're signing. Make sure you have a very good MOU in place, because it's what you see today that you don't know what's going to come out the time. So it becomes very important to ensure that your agreements are well put together. With that, it makes it easy for everybody to be able to work together. What I would like to say, because in our own experience with working with a lot of SMEs, like I said earlier on, we try to create that space for SMEs to be able to get access to finance. And one of the major issues we tend to find with a lot of them is the structure they have right now isn't going to make it possible for them to get a kind of funding and kind of platforms that they're trying to get into, and for those things to be corrected. So lastly, I would say a citizen of the world. Now, Dr. Akintoye said that we are the future. I am very, very passionate about Africa as well, and African businesses. More passionate about agriculture, because I call it the green gold, because that's what I believe that it is. So, but we need to become citizens of the world. That means we need to do things right. We need to do things in the way they ought to be done, and that way we'll have less issues. Even internationally, there are misunderstandings, but once you have your agreements in place, you have your structures in place, it becomes easier to be able to get those things resolved. Thank you.
Okay. Thank you very much, Fumi. I would like to, there's a question directed at Austin Okere, but I also want Dr. Akintoye to weigh in after Austin Okere. And the question is, how do we democratize access to capital for startups in Nigeria so that they replicate or even surpass the kind of results CWG got?
Well, there is no single way of doing that. Serving on the World Economic Forum, we went to China, to Tianjin and Dalian for the what we call the annual meeting of the new champions. We call it annual meeting of the new champions because these are companies that have won an award called Global Growth Companies. Global Growth Company is the one that the World Economic Forum has put a bet that this company is going to become a unicorn in its lifetime. And I went because we won such an award, and I've been going since then until the pandemic. And I found the Chinese model very intriguing. So when a company like Alibaba gets the support to grow, after a certain period of time, I think it's 3 years after the break even, they are now required to provide funds mandatorily for the support of another company that is up and coming. And that funds is literally patient funds, because with short-term funds, as I've explained with the banking loan, it's not practical because you can't use the banking loan with a tenor of 1 year to prosecute a business in development and in scale mode. Even though, yes, you pay less on the return, but it's only 1 year. What you need is patient fund and fund that is understanding. And that fund can be provided from the revenue of a company that is doing very well. Take Alibaba, take Didi, which is their biggest taxi. Those have that patient funds. We tried something like this in Lagos called the Lagos Incubator Fund, but it didn't go very far because there was a dearth of people that had trust in local people. When you're investing in people. So there was a dearth of trust, there was a dearth of funds, and the ideas that were coming forward were not very compelling. Everybody is a copycat of the other. There were no original creative ideas that you could bet on. So that didn't go very far. But the truth is that you need patient funds and you need someone that understands the business. So if Alibaba is taking on someone to grow them. It's in their business that they understand. So they know the nitty-gritty and they have the patient fund, then they grow another Alibaba. And that one, after 5 years of breaking even, grows another Alibaba. That is why if you look in the Chinese entrepreneurial space, everything seems to be coming from there. And I really like that model. I hope it's something we can learn from.
Yeah, thank you very much. Dr. Akintoye, I don't know if you're on, if you want to, what's it called, contribute to this question. How do we democratize access to capital for startups in Nigeria? So that
you are asking a question that requires like a lifetime to answer.
Yeah, but we have 2 minutes.
Yes, because of my job as an investor as well, I have very strong ideas about that. As you may or may not know, our group also owns Unicorn Capital, Unicorn Group, where over the last 3 years, we've incubated over 1,000 companies, funded over 50 across Africa. We're the largest global incubators with innovation campus in Nigeria, in Ghana, Kenya, South Africa, Mexico, Dallas, San Francisco. Every 3 months, we run incubation program for 100 people in that area. I can give you all the models from China to Singapore to Silicon Valley, but I'm going to say this: those schools of thought are already established, and we can spend a lot of time on that. But what I'm passionate about, the word democratizing, because I don't want to go the incubator angle or the government support angle or the bank angle. Those ones we can spend time to say how to make them more institutionalized. The one I want to speak to people about asking that same question is, until Africans stop saving and start investing, that question will be a problem. Somehow, Africans have assumed that inflation risk and devaluation risk is a better risk than business risk. It's insane. Every day you have money in your bank, get poorer. It gets worse. Whether if it's not devalued, inflation eats your money up. Why do you take that money and put in 10 entrepreneurs? So yes, I'm not saying don't save. Save to pay the school fees of your kids or your rent. The excess, either put it in savings deposit or in T-bills. How about you take it and look for great ideas from the Computer Warehouse Group and I think the Austin Academy to the incubator ideas, and put in great ideas, whether it is 10,000 naira, 100,000 naira. They are note programs, they are community programs, so you can put that money to work. That money, for every one business that succeeds, startups have 70% fail ratio, I agree, but 30% succeed. Guess what? That 30% that succeed pays back your principal and gives a return, real terms, as against money in the bank that is being eaten away by inflation and devaluation. So people asking us that question, you are part of the problem and solution. Start investing in your ecosystem. The fashion designer, the mechanic, the tailor, the school around you. Put money to work until capital formation becomes everybody's responsibility. That problem of capital being situated in silos will exist. Globally in the US, people are angel investors. They invest in ideas in clubs and platforms. We would rather save our money in banks under our bed sheets. That is the problem.
Thank you very much. That's very interesting. I'm happy you weighed in on that. We are running out of time very fast, so we can't exhaust all this. But there are 2 more questions I want Adenike and Jeffrey to take on. And the question is from Femi Aliki and is Aiki, and is asking, could a comparison among BVI, could you do a comparison among BVI, Mauritius, Delaware, be done by the party? Is there a suggestion that BVI works better for African companies? Adenike, I don't know if you want to start with that. I think you are muted again.
Thank you.
Yeah.
Right. So on the comparison part, I'll perhaps defer to Jeffrey a bit because he has firms in those jurisdictions. I could touch on those too. But the second part of the question is really one that interests me, that I really like to attack. And it says, is there a suggestion that BVI works best for African companies? In the interest of time, I will just say something very briefly, which is that the BVI is one advantage of the BVI that comes to mind with this question is, especially with respect to a lender, someone who lends to a BVI company or a BVI fund, is that we have a very robust regime of protecting someone's security. And that's achieved by our registration of the security. A brief document that's filed with the Registry of Corporate Affairs. But it has immense power because it gives priority to that security. So there's some comfort, a lot of comfort to a lender, to a BVI company when they register this security, because they get priority of enforcement of that security. Should something happen further down and they'd like to enforce that security and get the return on their loans. So that's something I think that's very advantageous to a lot of outsiders or investors into BVI companies. They know that the laws here can protect them, and that gives some added security.
Okay, thank you very much. We'll have just one more minute. Jeffrey, if you don't mind, if you can take on that question.
Sure. Thanks, Anthony. That's a very good question in terms of comparison between Delaware, BVI, and Mauritius. And it's actually a case of they mesh and they coincide with each other rather than a straight decision as to which is best. Delaware vehicle will be focused at US investors. If you're looking at, for instance, at an investment fund, it'll need to be SEC approved. And in those circumstances, you would look at creating that through a Delaware vehicle. But for all other investors outside the US, you certainly wouldn't use a Delaware company vehicle. So the likelihood is you would use a BVI company. So you split them between US investors, rest of the world bar US, they would go into a BVI company. And then neither Delaware nor BVI has the benefits of Mauritius insofar as Mauritius is part of SADC, part of the AU, and has asset protection treaties, for instance, in place with a lot of those African states, which minimizes any political risk you may have. So in essence, I would still then structure the investment using, if you've got investments with multiple investors, including US, I would have a Delaware vehicle for US investors. I would have a BVI vehicle for all other investors. I would then have that BVI company act as a master fund and then have a subsidiary, which is a Mauritius entity. And that Mauritius entity would then be the vehicle which would invest in whichever state, let's say Nigerian telecoms. So it would then form another subsidiary in Nigeria as the local operating entity there. And by that way, you're getting all the benefits of those different jurisdictions in terms of that investment. So I think it's more of those jurisdictions working together than any one standing out as the big advantage.
Yeah, thank you very much. Sadly, we are over time. I would have loved us to continue, but I'm hoping the organizers will indulge us by giving us 1 minute, and specifically 1 minute each, to just say your last words on mitigating risk of investments on the continent and how to scale up your business while doing that. Just 1 minute, please, starting with Adenike.
I'll just iterate what I said, which is that you can definitely look to the BVI to see the products that we have available that someone could use to scale up their business. We definitely, there's no additional layer of tax here, so you can use that to weigh in your financial considerations. In terms of securities, we do have a robust legal system as well that is respected worldwide. So, and we also have the separate commercial court to deal with commercial matters alone. So many persons who are using BVI entities in their corporate transactions would have a sense of relief knowing that they can fall back on jurisprudence and legal system that is respected and well known.
Thank you very much. Austin Okere, please.
Yes, so I just have two or three things. Let's all be optimists. Let's all be optimists, like Dr. Akitoye. You know, where people see volatility in VUCA, the optimist sees vision, such as Amazon saw that vision. Where people see uncertainty, as in VUCA, the optimist sees understanding, such as Uber did. Where people see complexity, the optimist sees clarity, such as Airbnb. Where people see ambiguity, the optimist sees agility, such as Zoom. The most important thing show up at your best, and show up at your best consistently. The 3 W's that sustain me: willpower. It means aptitude. Learn everything about what you're doing. Every day learn, unlearn and relearn. The second W is willpower. That is your attitude, where everybody says give up. If you believe in that cause, follow it. At the end of that tunnel will be the light. And the final W is weight power. It speaks to patience. Cocoa is not corn. Corn will mature in 3 months, but you cut it down after you've harvested. Cocoa will be 5 years, but it will feed you for life. That's all I have to add to it.
Thank you very much. I wish those were the final words. Yeah, but then we'll go on to Fumi, please, your final word.
Okay, for me, I'm going to pick up from where Dr. Akintoye started, was talking, and that's the issue of all of us being in the provision of capital. Exactly when he was saying it, I was so excited because we had to do something like that. We created a fund and we started raising money from high net worth businesses, and we've been able to raise such a lot, but I mean, within a short period of time, from individuals, we've raised well over $2 million, and we've been able to create more than 300 jobs. And when these businesses call you and everybody, thank you, it's just with very little amounts of money, we've been able to turn around a number of businesses. So for the SMEs out there who are wondering, is my business scalable? Your business is scalable. You just need to make sure that you attach yourself, like everybody else, to the best partners, the right partners that you need for your business, and you're going to be able to get to. It was not built in a day, and businesses that are scalable are those who usually, there must be a process to the way in which you're trying to scale. Somebody came to me the other day, told me she's trying to raise about, sorry, I'm talking in Naira, because that was what she gave me. Let me say equivalent of like $200,000. That's what she's trying to raise. But so far, her revenue is not yet even up to 200,000 Naira. So you can imagine the difference. And I'm like, where you are is so far. You need to take a whole lot of other things along. So I want business owners, be dogged, be focused, and you will surely get there. But remember that you need discipline along the way as well. Thank you.
Yeah, thank you very much, Fumi. Ayodeji?
Okay, thank you so much, Anthony. I think I would just like to build on Mr. Ortins Okere's point, talking about this risk management. In the emerging market of Africa, the most obvious risk to us is usually on FX volatility risk, right, compared to developing countries. And that's why that consciousness of how to manage your FX volatility risk for businesses in Africa must always be there. And like I mentioned earlier, in doing that, you must have a methodology, a strategy to evaluate your FX exposure and identify ways of mitigating those risks, right? There are various ways of mitigating FX. Some of them some exposures are even unnecessary, are avoidable. Like Mr. Austin said, you took a loan of $1 million, for example. Even if you took that loan in 2020, just a few months ago, of $1 million, it was 360 million equivalent. If you have to repay today, right, you'll be talking about almost 500 million naira to repay. Some business owners might be tempted to want to jump at FX loans because of the low interest, because dollar loans are usually cheaper than naira loan. You could have a variance of up to about 10% to even 15%, right? But the volatility risk, the devaluation risk, right, and even liquidity risk is a major concern. And you'd be better off just going for a naira loan than taking a dollar loan. Not that you cannot take a dollar loan, right? If, for example, you are going into a business that already has maybe an FX inflow, maybe you are going to an export business, yeah, it might make sense for you to enter into a dollar exposure because you already have a natural edge in place that can protect you against such exposure. But if you do not, you need to critically evaluate properly before you get yourself exposed in this kind of environment.
Thank you very much. Yeah, for that. Then Jeffrey, just one last one.
Yes, thank you. I would echo what Austin said. I mean, we're talking about risk mitigation here, but I also think that we see it with our clients. There's a clear focus and gaze at Africa. This is a time for opportunity and a time for investment. And as Dr. Akintoye said, it doesn't make sense to be overly cautious and optimistic in these days. I certainly think all international investors see the opportunity that invests and that lies in Africa, and they're going to be pursuing it. And I think it makes sense that people within Africa invest in themselves even more so.
Thank you very much. So with all those words, before we go, we'd like to watch a very interesting presentation from BVI. Kushbu or Hashi, please can you put on that presentation? It's a very short one, so just be patient.
The global economy is powered by millions of cross-border investments and transactions. International finance centers like London, Shanghai, and Tokyo facilitate this activity. They, in turn, are supported by specialist centers like Hong Kong, Singapore, and the British Virgin Islands. The BVI maintains a balanced and sustainable economy with tourism and business and financial services as the main pillars. The BVI's legal framework and its corporate structures enable investors from different countries and territories to combine their money for investments across the world within a system governed by English common law. The jurisdiction has modern and efficient company legislation tailored to the needs of global businesses. This exists within an infrastructure of other services provided by a group of expert professionals, including specialists in funds, trusts, and in corporations. If disputes arise, the BVI has the capacity and capability to address these through the Eastern Caribbean Commercial Court. As an alternative, organizations and individuals have access to the International Arbitration Center, which includes a roster of more than 190 highly regarded legal practitioners. For many years, the BVI has been an effective partner with all relevant international regulators. It compares favorably with other jurisdictions, including members of the G20, on international standards for transparency, tax information exchange, and anti-money laundering. Those investing in cross-border ventures pay taxes where they reside and where they invest. People choose to use the BVI because the government does not add an extra layer of tax on these investments. So while a company or individual may not have to pay extra taxes in the BVI, they may still have to pay wherever they are a resident for tax purposes. This tax neutrality helps lower the cost of making cross-border investments, and without it, there is a risk that some simply would not happen. International finance makes a significant difference to the lives of people across the world. These substantial cross-border investments provide the underlying finance that enables tangible investments in homes, factories, telecoms, broadband, and machinery. The BVI's Business and Finance Center is an integral part in the global economy. It powers more than $1.5 trillion of investment. It helps generate $15 billion of tax revenue for governments across the world and supports 2.2 million jobs. By balancing the requirements of private sector investors with a rigorous approach to regulation, the BVI sets the gold standard for business and financial services.
Thank you. That was an interesting presentation on BVI. We've had a very interesting discussion coming from the optimism of Dr. Akintoye, the practicality of Austin Okere, the technicality presented by Adeji Adelekun, the support that BVI provides you brought from Adenike's and Keck's view, and then the opportunities in AFCTA as enunciated by Fumi. These are all very interesting things that we've heard about. We thank everybody that has paid attention for the past more than almost 1.5 hours to this very interesting discussion. I think a recorded version will be online for those who want to listen more, especially the 3 Ws from Austin Okere who want to take it away. Please go back, listen to these discussions all over again, and I'm sure there'll be a lot of interesting takeaways for everybody. Thank you to the panelists. It's been a great discussion, and I'm very happy you all took your time to share your ideas and your knowledge and your experience with everyone on this forum. Thank you for everyone. Thanks to African Review for organizing this. And hopefully we'll have another opportunity to talk more about this again. Thank you, everybody. We'll sign off here now, right now. Thank you. Bye.
Thank you.
Thank you.
Bye.
Bye. Bye, everyone. Bye.